Morning, Steve Freed in Chicago with the morning grain comments. Well, the markets yesterday got a little excited about the noon maps suggesting that the 11 to 15 day time frame is going to be hot and dry across the Midwest. This morning those maps still are warm and dry for that time frame. So overnight bean prices are up 13 cents. We've got corn up 1 to 2 cents and wheat up 2 cents. The dollar is lower. Again, traders are trying to figure out when the Fed is going to raise interest rates or not. Yesterday they weren't, today they might. As far as crude, it's around $51 a barrel. Again, you've got the give and take between too much supply and expectations that demand might increase. We saw where China's May commodity import data was better than expected. Crude oil up almost 40%, copper and iron ore up. So while the data suggests that their economy is like going sideways, this import data suggests their economy is actually doing better, and that should help commodity prices. As we mentioned, upper 90s across most of the Midwest over the weekend. Rain moves in early next week. This is really a key rainfall event because it suggests that rains will move off the Dakotas, Minnesota, but as they get into the eastern Midwest, they could taper off. So if this is the pattern for the summer, this is not necessarily a bearish weather pattern. So we'll just have to watch and see if a ridge develops, where it develops, how big it is, and if the rains go over the top, you know, what that means for final yields. We've got the USDA report on Friday. Most of the market's looking for USDA to raise demand for beans both this year and next year and lower the carryout. They could raise the demand for corn for this year, but keep next year's corn crop high, which means the carryout for corn for next year goes up. Winter wheat crop should be up. Winter wheat, U.S. Wheat carryout should also be up. So the key of the report is the beans and what they do to the South American crops and what they do to U.S. soybean demand. Second day of the annual Milling and Bacon Conference, the economists thought the U.S. economy was okay. It's on solid ground, but it looks for slow growth. The crude oil guy thought that crude oil should stay in a tight trading range around $50 a barrel. And the Washington Insider was not a really big fan of Donald Trump. As far as the funds, they were buyers of beans, corn, and wheat yesterday, sellers of meal and oil. Crush margins have dropped on the board, and we've seen basis in the interior break in the beans. Corn farmer is still a steady seller of corn as the markets rally up. And we saw open interest moving out of the July. For beans, it's going to the November. For corn, it's going mostly to the SEP. And the wheat, it's also going mostly to the SEP. So the fun roll continues right now. As always, these are my thoughts, not those of ADM or ADM Investor Services, and have a safe and profitable trading day.